with MCA and me, Mike D. Forex.Today, life good doesn't come up. Life's good. There it is.
Life is great, life is great, life is good, life is beautiful. You gotta give it all you got, everything you got to give. Time to shine, time to live. Life is great, life is great, life is good, life is beautiful. Now you're living out your dream with your hopes up high. Your only limit is the sky. Hey, 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 hey.
So good morning, happy Monday. Brooks says, how was Thanksgiving? Namaste, thank you for asking. I bumped into my neighbor and her mother yesterday at the grocery store. And I'm like, hey, what's up? How was your Thanksgiving? And they said, oh, it was fine. How was yours? I'm like, yeah. And they said, didn't you go to Florida? I'm like, yeah, palm trees, sunshine, waves crashing, swimming in the pool. Besides all that, it was pretty good. Did you stay here? Oh, yeah. Well, yeah, I suppose being at home school, you know, it is sort of homey season. Well, it's lucky that people like me can tolerate neighbors like you. Yeah, no. So anyways, it's fun. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client, and I mean that. I tell you a lot, and I don't mind telling you again, this is my favorite time of the day. I look forward to working with you every day. I really do. I do these sessions Monday through Friday here at Forex.Today, except first Friday of the month, which is the Friday coming up. I'm over at FX Street, and I believe I'm doing trade non-farm payrolls live at FX Street for the 140th month in a row. 140 months. So obviously, I like what I do. I really enjoy it, and I like to see you succeed. I love getting emails about your success and your progress. It's not everybody, but it's usually the ones that have ridiculous, sickening work ethic. So anyways, when you're feeling confident that your skills are developing and you're starting to see success, please visit TradersWay.com, open up a live trading account. It could be a variable spread, fixed spread, ECN account, whatever you want. And we'd like to be the prime broker for your successful Forex trading business. Cool, right? Okay, I got a question right off the bat. How do you calculate your position side on each trade? Well, this really comes down to your business plan. Okay, literally business plan, not even trade plan, your business plan. So I like Brooke. Oh, Brooke's up 22% for November. Okay, well, see, Brooke uses more leverage than I would, but that's great. Congratulations, Brooke. So my advice to Brooke now is to lower your lot size. Okay, so this is perfect timing with Eliza's question. Okay, So this comes down to your business plan. So I understand if you got $1,000 and you're trying to make money, you're going to need to increase your lot size and all that kind of stuff. But this is I don't like the thinking, because I'd rather you be preparing yourself to trade other people's money. Okay, because I've been down the same path as you. So you can skip a few years here by listening to, Uncle Wayne. You will get to the point where you will realize that you're still not making serious money because you don't have serious money, and that your leverage that you're using, in this case the lot size relative to your account size, you're putting in big trades even though you have little amounts of money. What you'll find is this is the thing that's actually holding you back, because your losses are too big. Now, you might have some good winners, but because you're a little bit nervous with the amount of money, your stops are a little too close and all this kind of stuff. And the only way you can actually make a lot of money with leverage that way is to have a very high level of winners, and you have very, very few losers. And inevitably what happens is you can't afford to take your losses. And this is your Achilles heel. So one day you'll take a loss, and it'll be bigger than you normally have, and you'll say, I can't get out now, that'll be 40% of my account, and you ride it out, and eventually you blow up your trading account. I mean, it's the downfall. And you may come to realize that the secret to success really is not a high percentage rate, but letting your winners run, exiting your losses when they're small, making lots of little trades, and having them sort of add up and compound interest over time. All these things. Well, someone only trading a big trade in the short term is not going to benefit from things like compound interest, right? So inevitably what will happen is you'll realize having smaller lot sizes is a better way to go, because no individual trade can hurt you ever. And in fact, you could have 5 losing trades in a row, and it's like, it's nothing. 5 small losers is nothing. Maybe it adds up to 1 decent winner, right? So then you'll say, well, okay, so I can trade I can trade that way, and I'll make a lot of pips, but I won't make a lot of money. Well, we know the other way around. Making very few pips but making a lot of money doesn't work. It just doesn't work. You understand? You're over leveraged, so you can't afford your losses. Therefore, guess what's going to take you down? Your losses, because you can't afford to take the loss, right? So then you'll say, well, Wayne, how do I make a lot of money and yet keep my lot size small? Meaning, how do I make a lot of money yet keep my risk low? You know how to do that? How do you make a lot of money with low risk, or lower risk, we should say? How do you increase your profit and decrease your risk? Increase assets under management. Thank you, Ryan. You will get there one day and you'll realize, oh my God, that's how to do it. Well, that's what a professional trader does. It's not long-term trades. It's having a lot of money to trade. Well, if you don't have money, you have a choice. Jack up your leverage and hope you get nearly 100% winners, which is probably unreasonable. Or you develop such an amazing track record of success, of consistent profits, not big profits, just consistent profits, then you'll be able to go out, raise money from friends, families, and fools, right? Now trade their money and continue to build your track record of success, but now trading OPM, right? You're an opium trader, other people's money. It might only be, 50,000 or 100,000 or 5,000. I don't know your people, but you trade your people's money. And then, so 5-6 years from now, you'll meet people that you don't know, that are not friends, that are not family, and they're probably not fools. And it's like a rich doctor, or a dentist or something, and they're like, hey, here's 100K instead of 5, right? And you trade that person's money for 5 or 6, and all of a sudden his buddies or her buddies are jumping in, and here's 100, here's 100, here's 100, and it just snowballs. So it's this attitude like, well, Wayne, that'll take me 10 or 15 years to become filthy, stinking rich. Yeah, yeah, yeah. It will take you 10 or 15 years to get filthy, stinking rich. But I know your other way doesn't work. So, you know what I mean? So that's what so get down, trade like you're trading big money already. Okay? Which means lower your lot size, lower your lot size, lower your lot size, and do things like let your winners run, get out of losers quickly. Not 8 pips, but let's say at least measure. You should know your average loss. You should know how many pips you need to lose before you realize your trade plan is crap. Because that's the only time you're really allowed to lose money, right? When your trade plan sucks. You went long when the entire world went short. Well, you should kind of figure out how long does it take before you realize, you're the sucker, right? When you go to play poker, you look around the table and you try to figure out who the sucker is. And if you can't figure it out, you're the sucker, right? You're the one that's been invited because you're going to lose and they want your money, right? So anyways, focus on trading properly. Trade plans. Okay. Yeah, I used to do binary options when TradersWay offered it. The only problem with them, Ralph, is you cannot let your winners run. Nor do you earn interest. So you're basically a scalper. So good luck with that. I mean, sure. I taught people, if you go back on YouTube, you search like, I don't know, Wayne McDonell binary options. I've done several different videos on things like hedging using binary options and stuff like that, where you can cut your risk in half, right, and still get in a long-term trade. And that's where you have a cash position hedged with the binary option. Okay, truly like a hedge fund, because that's what hedge funds are supposed to be doing, right? Have you ever heard on TV or in the newspaper something that hedge funds are really underperforming the market, and that maybe it's a real problem? I've read that a few times. I'm like, wow, whoever wrote this just doesn't understand. Right? No one's read that? All right. So I don't read enough, so maybe I picked up the one stupid thing. All right. So anyways, lower your lot size, let your winners run, have trade plans for absolutely every trade you make, and realize that you are on a path. If you can do that for 2 or 3 years, then you can show it to somebody and say, look, for 2 or 3 years, I've been trading through all kinds of ups and downs and market conditions that are good, bad, ugly, sideways, shocks to the market, quiet periods, volatile periods, everything. I've traded it all, and I'm like a consistent machine. I churn out reasonable amounts of profit, and I never get myself into trouble. And then those people will give you some money, and you continue to do that for 2 or 3 years. And you're like a machine. You're very consistently, very boringly providing, return, never getting the money into risk or trouble. And then you get bigger money and bigger money. Off you go. And then one day you'll have to say, I'm sorry, sir, $1 million doesn't hit our minimum threshold. But if you go over here, you could find some, younger traders. Okay, Robert says, Robert, you're talking about the hedge funds? Well, how about this? What does a hedge fund do? It hedges its positions. So if you took a stock picker, right, aka your rich neighbor, probably says things like, well, look at me, man. I'm up like 20% this year. The average hedge fund is only up 10%. I'm like, well, dude, you're long only, you're cash only, and you're not hedging. And you're probably leveraged, right? You know what I mean? Like, well, hedge funds have lower returns in a bull market because they're hedged. It costs money. But when the market drops 20% and you're leveraged and you drop 20% or more, guess what? The hedge fund will only be up 5% profit, but you'll be down 25. Oh, right, like, yeah, yup. But why doesn't the Wall Street Journal know things like this, right? Like, oh, well, hedge funds are underperforming. Maybe, is everyone going to be indexed in the future? Everybody should be indexed. Well, why weren't they saying that at the bottom of the stock market back in 2008? I was the one saying that, but anyways, whatever. Okay. Oh, you want to do some Forex? Okay. Do you want to do the calendar first? Yeah, I feel like we should. Forex.Today. Yeah, Forex.Today. Go get me some soup in Singapore. Nice soup, wait a minute. And spicy seafood and cold beer. Good Indian food. What else? Hey, is there an old town in Singapore? Is there like there must be. I mean, it's a new country, but it's an old place. Come on, log me in. I was watching some movie. Was it Pirates of the Caribbean? I think it probably was, where they go to Singapore. I want a Singaporean pirate. There's been a lot of updates to the website, so if you guys are having trouble, let me know, and I'll beat somebody. Arrgh! Yeah. Okay, I want to get my mustaches that grow really long like that. So Pedro's having trouble. All right. All right. I'll scream and yell at somebody for you. I just don't think there is an old Singapore pirate town. But it'd be great. Be great. All right. All right. You ready to go? Not to go HOTTO. Yeah, Daniel's like, no, nope. But you guys know the scene I'm talking about? It's like the third movie or something. It opens up and they're in Singapore. Elias, okay. Thank you, guys. And I'm like, yeah, so I was watching it with my kids, I don't know, a year ago or something. I'm like, my friend Daniel lives there. My friend Daniel lives in that floating hut over there. Yeah, with Charlie on Fat, of course. Yeah, he lives right there. So anyways, but that would be the Singapore I'd like to see too. I'm like, what are all these nice new buildings? This place sucks. Everything's so clean. All right. So, okay, let's get going. Monday the 27th. I thought it was later than that. I was crying like it was practically Christmas. I guess it's only the 27th. I was telling my kids about spray painting. And I'm like, you get 10 lashes with bamboo. Right? They whip you with leather belts if you spit your gum out. So I'm going to take 10 packs of gum. Leave a big chunk of gum that big. I'm like, what are you going to do? It's still one piece of gum. Yeah. Yeah, I'll be famous. All right. So housing starts. I want to think a year ahead or even 2 years ahead. Do you mind if we start with that preface here? Because I've been skipping through the data for about 6 months or 7 months or 8 months where I'm like, yeah, look, I know the trend. Look, the housing market, I get it. Retail sales, I get it. Inflation, I get it. I mean, we're in a cycle. I get it. Each individual piece is just, if it's unexpected, you'll get maybe some volatility to scalp or something. But in of itself, each individual data point, a trend does not make. So the trend is the overall sort of average directional, direction, but speed, like where are we going, how fast are we getting there? But it's all kind of preset, right? Nice, Elias. But hang on. But thinking ahead now is when is the trend going to end? Okay. So what I'm thinking is if there was going to be a slowdown, where are we going to see it first? And when is it going to happen? How about well, the government wants to release a tax cut, right? Well, we're not looking for them yet. So the tax thing at first should be a rally producer because we talked about that the other day, in the middle of last week, right before the holidays. Remember when I took you through the definition of disposable income? And by lowering your taxes, increasing your disposable income. So I think there could be some sort of like, almost like a Trump effect, like, oh my God, Trump's going to spend $1 trillion and the economy is going to go straight up. Remember that? And I couldn't stop laughing. Like, how stupid are people? Could they be any more stupid? Like, they've elected Trump and he's just going to cut a check for $1 trillion in shovel-ready projects. I mean, the government is so slow that even if he could do that, which you can't on your own, but even if he could do that with the backing of the House and the Senate, it would still take years to hit the real economy. Years, not days, right? So right? So when does a tax cut really hit, and and all that kind of stuff, and what is the marginal propensity to consume in the United States and all that kind of stuff? Okay, great, fine. So when that kind of fizzles out, and that bear in mind, two other things are happening besides that. Both are monetary. Okay, that's a fiscal event. What's happening at the Fed? What are the two things happening at the Fed? Monetary policy, right? You have fiscal policy. The government can do fiscal policy and they can do monetary policy. Well, the two things, okay, Robert and Robert say raising rates and selling bonds. Well, those are the same thing. Right? All right? Raising rates is selling bonds. But they're lifting the short end of the yield curve and the long. Okay, they're doing OMOs to raise short-term interest rates, aka the Fed funds rate. But they're also trimming their balance sheets, selling long-dated bonds. So they're raising and shifting the curve, which inevitably will raise mortgage rates. So I'm kind of like, when does that hit its wall? Well, so the wages, yeah, maybe, when does that hit? And the other thing is productivity, which is a big part of GDP. GDP, in a sense, is productivity, right? But can a country with a declining workforce have an increase in productivity? So like a country that's closing its borders, by definition, is suffocating itself, right? Yeah, well, there's only innovation. Okay, so now you're talking about what's his name that won the Nobel Prize, but it's kind of hard to bet on innovation, right? Especially when your country doesn't produce engineers. Have you been to America lately? Oh my God. Right? Going to the opera in the United States now is kind of like watching Animal House. Yeah. Jonathan lives in Engineer Town. Where is that? Huntsville. Yeah, right on. Oh, been to Huntsville. Nice. Cool. Right on, guys. So anyways, whatever. We're talking too long dated, but if there was going to be a slowdown, let's say in the United States, if there was going to be a slowdown in the United States, when would we see it? That's kind of my thought process. And the interesting thing is the United States is a fairly independent economy. 70% of the U.S. economy is consumption within its borders by the citizens of America, right? So that will hurt others. It won't necessarily, a global slowdown doesn't affect the United States as much as it does Japan, for example. So I'm just wondering about things like that. So housing, I think housing will be on trend, but what if next summer with interest rates 0.75% higher. Well, you know, it's only 0.75%, but that's Fed funds rate level, right? But could be higher at the long dated stuff. But basically, interest rates might be up like 50%, right? Let's say if you went from 1 to 1.5, that's a 50% increase, right? So, anyways, at some point, because policy and real economy move on different trajectories, sometimes they meet or diverge, right? So it's too bad you can't measure all these things in real time and have like a MACD for, fiscal monetary policy line, right? And real time productivity line. You're like, oh, wow. Yeah, that would be awesome. So it'd be a lot easier to maintain right? But it's too bad that the government is even involved. Who cares? So if I was writing a book about the future, I'd say one of two things is going to happen. The government's going to collapse. There will be no government because this social experiment we've had over the last 100 years to take care of poor people, take care of sick people, to take care of old people. Look, it doesn't add up. Just do the math. It doesn't add up. Right? Just do the math. It doesn't add up. It will break. That's why I've always said India is going to be like the future, where you're going to have democracy, tons and tons of people, no social infrastructure whatsoever, but somehow it works. But you might have a family living in your backyard because the government's not paying them to live in public housing. They live in your backyard, they wash your car, cook your clothes, or cook your food, clean your clothes, do your gardening, and they live back there, and the kids go to school, and they live in a safe neighborhood, and everything's great. Or the government fights and says, well, there's a problem because the market has failed. Well, it's failed because the government got involved, but the more it fails, the more the government's going to need to be involved. Therefore, inevitably, the government will control everything. We go right back to socialism, communism. The whole time, capitalism would have worked better without the government. Capitalism works because of the equilibrium. It shifts. Now, like you could have a deep depression like in the 30s, or we got close to it recently, right? But eventually, it will resolve itself. But there's a lot of pain in between. And what if the eventually is 40 years? What if there was a 40-year depression and then it corrected itself? Well, the market doesn't care. It works. But the people will care, right? So now the government has to get involved to speed that whole process up and whatever. But we know it's never been successful and probably will never, ever be successful. So I don't know, we'll either have 100% government or zero government. Either way, it would make an interesting book. No, Peter, I've been around in India. I can't say I've lived in India. I've been through, I've been to Delhi, Agra. I was in Rajasthan for a while. I was up in Chandigarh, up in Punjab. So I've been around. I haven't been south, but it's an interesting place, and it somehow does work. Yeah, it's polluted. Yes, it's dirty. Yes, there's too many people. But there's also really some cool aspects to India. And the thing is that somehow it works. That you see a guy, the only clothes he's got are like, it looks, shorts, I guess, and flip-flops. He doesn't have any other clothes on. And he's sitting on a flatbed trailer with just two wheels in the back, being pulled by a donkey. He doesn't even have a chair. He's just squatting on the flatbed, holding the reins, the donkey, and they're going right past, the $300,000 Mercedes, right? And he's going by in his little flatbed, pulling a stainless steel fridge. He's delivering it somewhere, and he has a cell phone because that's how he gets his job, and then off he goes, and he's delivering it. Now in America, you don't have stuff like that because you get paid $40,000 a year to do nothing. That guy doesn't get paid, so he gets himself, fashions himself some sort of flatbed trailer, begs, borrows, steals a donkey. Now he's got work, right? He's got a cell phone, he's got a flatbed, and he's got a nice ass. That is a job, right? Yeah, and it gets done. And by the way, you buy a brand new stainless steel fridge, you can have it delivered. You're like, hey, no, no, no. You go outside and some dude delivers it to your house. So I don't know. I think we're going to get to that point, I hope. The worst is the government's totally control. We all work in the factory and they feed us fabricated food grown from mold and that. But, you know. It's true. It'll either be we all live in a factory controlled by the government, or the whole world becomes India. But it's democratic. I'd like to take the religion out. It just muddies things. You can have religion, just not pull it out of the government part. So anyways, I don't know. How do we get to these things? So new home sales. I don't think we're going to see anything off trend, but maybe in a year. You know, so the next big boom in real estate is supposed to be summer, right? How will the market adjust to higher long rates in next summer? Now, very often that could act as a catalyst because then people are afraid if they don't buy now, it'll be even more expensive. Plus, housing prices are going up. I'm making good money on my house doing nothing. I sleep at night. I wake up in the morning. I'm a little bit richer. I say, thank you, house. And I go, I'll kiss you on the wall. Right? Although I have to put in $300,000 in windows. I got a window quote. 267,000? So it's not 300. $267,000 window quote. I'm like, what? But anyways, housing prices are going up, right? That's a lot of windows. It's nice. They're nice windows, though. Come on, Robert. So anyways, so if it's not next summer, what about the next summer after that? Like, kind of where are we in the cycle? Is Europe really saved? What if Europe doesn't save itself? What if Europe continues to be a global drag? Right? I mean, look at the UK and the EU. Like, what a mess. What are these people doing? Right? So what if they just drag us down? What is going to be the bad effect, right? Okay. So I'm thinking if it's next summer or the summer after might be an interest, but those are 3 years ahead. So the thing is, if you were going to invest money, okay, where would you invest? So you need to be thinking 3 years ahead. So that's why I'm thinking 3 years ahead. Okay, so anyways, we'll go through there. Carney speaking, pay attention. Financial stability report. Stress test. So what do you think? No, Ryan, I think the future is simply owning. We're going to look to the past to understand the future. So you need to become a lord. Okay? You need to own. Yeah, well, wealth, and you know, owning land. So like, we're going to have what, 2 or 3 more billion people in my lifetime? Why don't you own some land? There's a good start there, right? But yeah, you need to own. Again, it's the difference between wealthy people and poor people. Wealthy people don't have to do anything and they make money. Money is so easy. Right? You understand? Like when you're wealthy, money is easy. You don't do, it's like free. You don't do anything. They're like, sir, you made $4 million this year. And you're like, really? Cool, man. Right? And then a hardworking person working 2 jobs, like, dude, you made $80,000 a year. You're like, oh my God, I'm so tired. I worked my ass off. Money is easy if you're wealthy. So a wealthy person simply doesn't spend their money. You understand the GDP part? There's, right, consumption, which is means poor people spending money. And then I is investment, right? Now, I've described it not quite properly. I've described it as business spending, right? When I do GDP, where's my drawing tool? I simplify things. I dumb it down, right? For the lowest common denominator. So I say there's consumer spending, I say is C. And then I say I is business spending plus, right, government spending. That's how I break it down. But it's not government spending because there's transfer payments in there and stuff. So you shouldn't really say that. It's government purchases, and you separate transfer payments. And transfer payments are part of disposable income, but they're not part of GDP. You can get into it, right? And then I'll say I is business spending. C is consumer spending, but it's not actually true. C is consumption. So that's a poor person going to Sam's Club and buying a 4K TV for $899. And I'm like, damn, that used to be a $10,000 TV, right? And he's like, I got a 65K, right, or 65-inch 4K TV. I'm going to hang it on my apartment wall. That's a poor person. Okay? I is truly investment. Now, when a business buys a factory, okay, or a business buys a machine, or you buy a house, that's investment. Do you know why? They're assets. You should be all I. If you were ever in my house, by the way, I'd shoot you dead, and my dogs would eat your carcass and drag you out and bury you down by the lake. But you'd be shocked. You walk in my house, like, dude, this place is empty. People walk in, they're like, how long have you lived here? Because they think we just moved in. They're like, when are you going to unpack all your crap? I'm like, sorry, honey, we don't have any crap. There's like a couch and 3 candles. Yeah. We're investing all our money. Yeah, no TV, but 18 screens, right? So like, this is crap. Over here is crap, right? So anyways, so what you should do is invest everything, anything you spend money on should give you money back. You should spend your money on cash flow, right? I don't own a car. Why would I own a car? I'm supposed to do a YouTube video with my Lamborghini Murcielago. I know it's older, but I like the Mercy. I don't want the Huracan. I want the old Murcielago. Anyways, I'm like, look at my Murcielago, because I'm a Forex trader. I made this in 4 seconds flat. It was great. You should be rich like me. Look, I got a Rolex. I got a Rolex, right? Yeah, because I'm a Forex trader. Boom! Right? No, 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 no. Right? No, 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 no. I put all your money into things that make you money. And when you're old and you're too old to get out of bed, you will have money to take care of yourself. Right? You will get to the point where your assets pay for your lunch, your dinner, your breakfast, your mortgage. It's all paid for by, right? Yeah, well, driver. Right on, James. Yeah, cool. Very interesting. So, anyways, assets, guys. That's how you become wealthy. Don't spend your money. Don't, right? So, if you were 20, okay, if you were 20 and you invested $1,000, inflation's 3% on average, stock market goes up 10% on average per year. So you're I think it's when you're 20, okay? You put the $1,000 into I don't know, index, right? When you're ready to retire at, let's say, 70, it's something like $70,000. Right? So if you gave your 20-year-old child, let's say upon graduation, they're 22 years old or something, right? Upon graduation, you give them a trust. And you're like, I put $25,000 in this trust. It's all invested in the stock market, right? And when you're 70, it'll make itself available to you. You're like, but Dad, I'm 22 years old, right? I'm 22. I need the money now. But I have student loans. But I need to buy a house. No, I need to buy a car. But I'm getting. You know what happens? They turn 70. They quit their job. They retire. The government says, "Great. Here's $1,200 a month." And you're like, "Oh, that's good." And then all of a sudden, an attorney calls up. Hi, I'm from Dewey, Cheatham, and Howe. I want to remind you that you have a trust that your beautiful, caring, kind, smart, right, father gave you when you were 21. Remember that? By the way, it's worth $1 million now. Come collect your $1 million. You're like, oh, snap. Right? $1 million only cost me 25, and all of a sudden I'm like the coolest guy ever to live. Well, that's the problem, Kenny, right? Everyone cuts corners, right? So I hired a woman who made $40 million. She was the first marketing person, I guess you'd call it, at Netscape. So Jim Clark sat down with her and said, all right, buy yourself a house, buy your mother a house, buy yourself a fast car, right? And put everything else into trust until you turn 40. And she did it. All her friends became drug addicts at best. At worst, they became angel investors because they were so smart, because they made their money. They know everything about it. So anyways, most of them really bought like 20 houses all over the world, started snorting cocaine and all this kind of stuff, and really just found themselves, by the time they hit 40, kind of drifting nowhere in life, and she had to keep working. And so she was working for me. And she's like, yeah, I only got 3 more years left, and then I pick up my 40 million, and my husband and I are going to move to the Redwoods and smoke pot, which I'm pretty sure she did. But I'm like, wow, man, this is the young world, huh? I'm like, she's my age. I was just never a druggy guy. So anyways, she locked her money up when she was 22 or something, had 40 million in cash, locked it up into a trust because she took Jim Clark's advice. And she ended up having a good life because she was focused and driven and did a job well, and all that kind of stuff. And by the time she was mature, then she could handle the money. Amazing, right? All right, so anyways, start trading the pound today, maybe. Yeah, her story was funny because she, this is back even when cell phones were new. She was riding her bike, in spandex. Phone rings. There's a startup. They need to talk to you. They have some questions. And she's like, well, I'm riding my bike. Where is it? Oh, it's over there in Mountain View. All right, I'll just ride up. So she rides in. She's got a bike helmet under her arm. She's wearing spandex. And there's this guy named Mark Andreessen saying, hey, we just mailed out a whole bunch of floppy disks to a whole bunch of college kids with this thing for looking at images on the internet. She's like, oh, well, are you following up with them? Are you tracking the information? Are you getting feedback? I'm like, no. Could you do that for us? She's like, yeah, I could totally do that for you. All right, boom, you're hired. By the way, what do you call this place? Mosaic? Later on became, let's change it to Netscape. Netscape sounds great. It's like landscape on the net. So Kenny says, how much do you spend when you're young? Well, every time you spend $1. So let's say you want to buy a pack of gum. Okay? Would you spend $65 on a pack of gum? Then don't buy packs of gum. Invest your money. Multiply everything by 65. You're like, this TV is on sale. It's only $1,000. It's this 65-inch TV. I could put it on the wall of my apartment. It's awesome. Would you pay $65,000 for that? No. I don't have $65,000. Invest it and let it sit for the rest of your life, growing and compounding. So that when you're old and you've worked hard your whole life, you'll be filthy, stinking rich. No, you didn't have a 65-inch TV in your 30s and 40s. Who the hell cares? Unless you want guaranteed poverty, then buy the stupid TV. If you could say, well, yeah, I could spend $65,000 on that TV and it wouldn't make a difference to me, well, then you can afford it. So, yeah, that's how you live your life. Okay, that's how rich people live their life. Okay, so Case-Shiller doesn't really matter. Even Case-Shiller doesn't care, or Schiller. Plus, he's a Yale guy. Okay, Wednesday. Well, besides GDP, not much else, right? You want an exercise? Try to guess GDP. How do you guess? Look up the numbers. It's called a model, build a model, right? Consumption plus investment plus government purchases plus net exports. Facebook, yeah, good read. You know, sometimes this Kiwi news is they have it as a medium. That could be a market mover. I think there's a lot of people praying. I don't know. Maybe it's just me. Okay. And then this, I think, is the Chinese news. Okay. I know it's services, but still, you know, it's part of the 5-year plan to grow the service sector, right? So, you know, Aussie new home sales, you know, I think we care more about their export data, right? So anyways, yeah, I think you should pay attention to this. It's not the biggest in the world, but whatever. Thursday, European unemployment rate, European inflation. Sure. See, all of this is just pulled out of the GDP numbers, right? Personal consumption, spending. Okay. But the Fed watches PCE, so obviously that's going to be a market mover. So that's Thursday, though, right? Did I miss? Where's Wednesday? I missed 8 o'clock. 8 o'clock. 8 o'clock. Yeah, we have non-farm payrolls, don't we? Isn't it this week? Friday the 1st? Oh, it is next week? No. I must have misspoke. I thought it was this. Oh, my phone is updating me, right? That's what it is. My phone is updating me 2 weeks in advance. Yeah. I guess that's good because I want to get out of town. Okay, because I was looking for ADP, and then I'm like, wait, I don't remember ADP. So, all right, good, good. I had a little bit of pressure on me. All right, so I should be able to go and come back before then. Cool. So let's go back to Thursday then. I was clouding my mind to there. See, like European inflation, okay, fine, but PCE out of the United States is going to be the bigger one. I don't know about the Japanese CPI. I guess if you're trading Asia anyways, right? Friday. Is that Polish purchasing? Polish PMI? Sweet. If you trade the zloty, you can't miss the Polish PMI. Yada, yada, yada. So, you know, there's some market movers in here. They're not, it's not at a crazy amount, right? Definitely trade the pound today and hope you get lucky tomorrow. And then PCE could be interesting too, right? Robert said never heard of the 65 rule. Well, it's actually the rule of 70. You may have already heard the rule of 72. So my assumptions were 10% stock market growth, 3% inflation. That leaves you with 7. So I'm using a rule of 70. So every 10 years, your money doubles, right? So I said, what? Give your 20-year-old kid 25 grand. So when they're 30, it's 50 grand. When they're 40, it's 100 grand. When they're 50, it's 200. When they're 60, it's 400. When they're 70, it's $800,000. Adjusted for inflation, it's literally $800,000 when you give the kid, congratulations, you graduated from university, here's $800,000. It only cost you 25. So that's what I'm doing. Well, just go into a poor person's house. It's full of crap. They spend money. You're like, wow, every square inch of this tiny little place is filled with stuff. There's stuff everywhere. And that's why they're poor. I mean, it's one and the same. Like, that's why there's no wealth. If they had saved all that money and then invested into an asset that makes money, they wouldn't have any stuff, but they'd have that asset. It's sort of like the story of like an immigrant family moves from some place, and they take all the cash they have and they buy a restaurant or something. Well, the restaurant is an asset. It makes money. Then they go and they have a very humble home, right? But they work at the restaurant day and night for years and years and years, save some money, maybe open up a second restaurant, work years and years and years, you know, but they still live a modest house. But all of a sudden, by the time they're ready to retire, they sell their 4 restaurants, and boom, they've made it big in America. And they're like, man, they have like $3 million. And they're just immigrants from Vietnam that have been here for 30 years. You're like, yeah, well, they threw all their money into an asset, worked their butt off, and once they had some cash, they reinvested into the business and expanded their assets. All of a sudden, when they retired, they owned a bunch of assets, and they had 0 liabilities. So they sold their assets, and now they have a big pile of cash. And then what? And then you got to say, well, we got to close the borders for people like that stealing my wealth. And you're like, no. It's not how it works, anyways. Okay. So sorry I babbled on today. Go quickly here. We have gold going up. Gold is going up. Good job, everybody. Making money. Great. We have USD CAD trying to head down. This was sort of a break point. You measure this up, it's a 618. So I think our conversation last week is I don't know if it's going to make a lower low. I don't know if it's going to double top or make a higher high. Oops. Where did it go? There it is. Right? Do you remember that conversation? I only know where bears are going to be. Anybody remember that? I said there's going to be bears there, and there's going to be this line I actually drew as part of that presentation. I don't know if they're going to sell, but I know where they are. Right? And that's that. So I don't know what's going to happen in these levels, but you can assume a bear is going to be there and a bear is going to be there. Why? That's a 618. That's a Fibonacci. Done. What more do we need to know? Right? Are there bears here? No, we're back at support. So if you happen to be a bull, you can stink about it, right? But you better be careful because now you're being a bull after a 618 retracement. But We've already made an attempt to break this and have already failed. So you can measure this as weakness. And you start to put together a trade plan. Now remember, a trade plan is a hypothesis. You're like, if this level is supportive, then you will see things like oscillator rollovers, moving average crossovers, reversal patterns. So maybe at this pivot cluster or that pivot cluster, you'll see something like a 1, 2, 3 reversal on smaller time frames. And so you drop into the 1 or the 15 and you take it around. Done. Trade plan. Right? Oil. What happened to my chart? Weird. We lost all our analysis. All right, well, let's just do a regular one. Okay, we're already through the monthly target. So what happens now in the last week of trading? I don't know. Yeah, sorry guys. Internet down, or actually power down, therefore internet down, therefore got to pull the plug. So see you tomorrow, guys. Sorry about that. Yeah, and I'm pretty sure the webinar sucked today too, so I apologize for that as well. See you tomorrow.